Hello everyone, welcome to Smart Investing. I'm Albert, and today this video is going to be about the banking services sector. Again, I'm going to continue just 5 stocks for the banks. I want to try to make this a shorter video than my previous ones. So, I know I'll waste too much time, but I'm really just going to jump in to these stocks. So again, I only have 5. We're going to start out with the first one on the list. So again, I'm going to be doing a fundamental and technical analysis, just real quick. Again, as I make more videos, I'll familiarize myself with the Webull app, with the new update, as well as the whole numbers and the statements and everything involved with the new data that is being provided to me. So the first company that we're going to go over is this one, WAFDP. So it is called the Washington Federal. Let me get the correct name so that way. So Washington Federal Inc. So it is not a central bank. I mean, I guess that's the name of the bank. So we're going to start off with the first page like always. So the first page up that I have is at $20.07. So we have here 52-week high and low. We have a market cap of 240. The 52-week high and low. So that is a difference of about $10. So now I'm looking at pretty much this over here. So this is done, this is done, this is done. So I have here, this I don't look at too much. This I'm going to look at, that I'm going to look at, that I look at real quick. Usually I look at that. Every once in a while I look at that. This I don't look at too much. This I don't look at too much. This I don't really look at. Definitely this. And the earnings, I don't really look at that. There's so many companies just to see if they did good or not. I mean, if I go over them again, eventually they'll show if they hit or miss. I'm not gonna go through the whole routine and cover the whole earnings call and all that. That's just too much time, and I think people get too entangled with that. I think they just spend too much time with that. So let's see what we have for our info. So this I don't really need. So this I need. The PE, that's undervalued. So comparing for the volume, average volume, it's about the same. So we have earnings per share higher than the dividends and the dividend yield. So let's see the charts. So we're going to look at a 5-year chart. Just want to make sure. So 5-year chart. It's the same as a 5-year. When I look at the 1 year. So it doesn't look like this company has been around for a long time. So we're just going to keep it like that. So for this year, it's gone down in 2022. Had a sharp move up. $4 move up this past month. And now it's dipping down again to start off the month of June. So then that was only a $2 drop. And let's see what else we have for information. I don't really look at all that at the bottom. Order flow. Every once in a while I look at order flow. Again, because I don't know how often the order flows get updated. after hours. I mean, obviously, excuse me. Obviously, throughout the market open, those order flows, you'll see them with the level two data. But when it's closed, it's just hard to see um, a precise number of the orders that was scaled in. I mean, yeah, I have the large orders. I have them here, but I want to see. Hold up. Because for the large order at 59, then I have that. Okay, so that must have been for today. So again, I've said this before. Uh, Large scale orders. I don't know what is the minimum amount of shares that counts as a large scale orders. Um, I tried looking that up one time and I didn't really get much information. So again, I'll keep researching. It's no big deal, but that's a question and an answer I have to find out. I'm sure the answer is somewhere and from a legit source, not just somebody saying it. I'm sorry, but I'd rather find a website that'll say the actual answer instead of hearing from, people. I just want it to be official. I'm sorry to be that way, but again, nowadays everybody wants to voice their opinion. That's fine. But again, there are so many people that are not registered financial advisors, including myself. I'm not a financial advisor. So to actually get information or to legitimize a certain terminology or a certain aspect can really solidify, the information being presented. So that's all. I just want my information to be legit and accurate like I always do. So we have here WAFDP. Uh, they have a ranking system, but I'm not going to go through all that because, people feel different about certain companies, big or small. So I'm not going to get into that. I think that uh, people might get into controversy when it comes to ratings, but I mean, it is what it is. People rate what they want to rate, and you just have to accept it. So, like for example, let's say I like this stock and I think it was ranked too low at 139, but somebody who doesn't like it thinks it should be ranked even lower. You know, who am I to blame? And again, everyone's entitled to their own opinion. That's fine. All I'm saying is that uh, when you do present or say information, it would help to say where you got your information from, not just saying it just to say it. And to also say how accurate your information is. So anyhow, moving on to aside from the rating system, we could look at that real quick. So the ranking has dropped. That's what it looks like. And we'll keep that. So analysis for the quant ratings for this company, it is showing, wow, that's insane. These are decent numbers. It's showing decent growth, decent income, momentum, quality, and decent value. I honestly don't know what to think about that. Let's look at based on the price. I'm not crazy about it. I could be wrong. It could be a growth stock. Again, sue me. Who knows? But let's take a longer look at this. So we have here. Why doesn't it show me? Oh yeah, it's a newer stock. So I was wondering why it's not showing me annually. So we have here net income doing pretty good. Revenue has to be going up to be pretty decent. And I don't have, wow, no revenue, no income, no operating income. Balance sheet, typical for a bank. So we have here, they are paying US dollars. So 30 cents to start out with. I can't say whether that's good or bad. It is what it is. 30 cents staying flat. So it looks like they're not going to be raising anything. So let's look at the profile for the bank, and that's pretty much it. So it looks like they can cover dividends. And then for the profile, Washington Federal is a bank holding company. Company conducts its operations through a federally insured national bank. Washington Federal National Association. So it has a lot of branches, and they pretty much nothing crazy. They don't really specialize in anything. They just a typical bank. Insurance brokerage activities, checking accounts. It says in both interest bearing and non-interest bearing. It says it at the bottom. So I'm reading at the bottom. So that's pretty much it. I don't like that stock, so I'm gonna say no, and we're gonna move on to the next one. CHMG, Chemung Financial. So we're gonna look at the 5-year real quick, and we're gonna look at the first page. Market cap is at 205 million. So we have earnings per share at 5.72. Looks undervalued. So between 52-week high and low of rounded off to 50, a low of 41, so $9 difference, not much, hasn't been moving. I don't even need to look at the chart based on that. It's gonna be flat. I'm gonna say no to this stock just because it's flat. Even for the 5 years, you would have no capital appreciation. I don't know about you. I do like rising dividends and consistent paying dividends, but if they are flat, I mean, it's not bad. It's fine. I mean, you break even on your investment, so be it. Some people may be comfortable with that. Me personally, I would love to have capital appreciation. If you're gonna invest in something, at least get somewhat of a return. If not, it is what it is. But we look at the 1 year again; it still looks flat and choppy. Um, it's something not really appealing, to be honest. So we're gonna move on to uh, bear with me because I'm not used to the ranking system. I can't even find where to compare these companies. Before you, I don't know. I'm probably missing something. I just don't see it. So decent numbers for the quant rating. Out of all 5 categories, out of all the five, it has a rating of 5.83 average. So for all of them, I mean, it's okay. It's not bad. It's not the best, but it's not bad neither. So, like I said, from looking at the chart, it looks flat. I'm not too crazy about it. It looks like they have been beating earnings for the past 4 times. I wouldn't say by big margins, but they've been hitting pretty big. They've been outpacing their target, which is really good. And let's look at their balance sheet. So we have return on investment, return on assets. At least it's positive. Nothing for net margins. I don't have info for it. Cash flow. And again, I'm using PE. I shouldn't really be using PE to measure the bank stocks. It's either price to book or price to sale. One of the two. Can't forget, there's so many metrics to evaluate companies. So again, same concept. I'm assuming this company is over 90% debt. I'm gonna assume the margins are really, really low, like 1%, 2%, because banks just love doing that, and they're highly levered. Earnings, I'm not surprised that they're flat, but let's look at their revenue, and I have nothing for revenue again, and nothing for operating income. So just triple checking if something came up. Obviously, debt and asset is pretty much flat. Cash flow, let's see real quick. It looks like it's positive for the most part, which is good. So now we have a peer comparison. This is actually pretty good at the bottom. So they're giving me numbers for value. Well, some of these numbers for each category here. So the highest rank that they have, let's say top 50. Let's go top 10%. So 10% of 518 would be 51. So that beat rank 51, and this was close to rank 51. So it said net margins and dividend yield. So net margin, excuse me. So net margins, from comparing to their peers, showing me that's really good, even though I don't have a number, but we're going to look at some numbers here. So dividends have remained flat for like so many years. And obviously they're a holding bank. So again, dividends have been flat, and company just, excuse me 1 second. Oh, sorry about that, guys. So the chart is flat and the dividends look flat. So again, I'm gonna say no and no to that company. I'm not too crazy about it. So we're gonna move on to the next one. BSVN. This is Bank 7. So we're gonna look at the 5-year. It looks pretty good. It's gone up ever since 2020, and as you can see, it has beaten out the previous years, which is good. Even though it's staying flat, still pretty decent. comparing 52-week high and low, a difference of about $10. So we're looking at volume now, really low volume. Paying a dividend, yield close to 2%. Stock is pretty cheap at $24.38. So this stock doesn't look too bad. I think I like the fact that it's undervalued, but then also um, it's gone up slowly over the years. Even again, even though it stayed flat, that's still fine because now with that amount of time frame, it can create interest. I'd rather have a stock go up and stay flat for like a year or two to come up again, because obviously, uh, within a 1 or 2 year time frame, if it hasn't dipped really low, I mean, comparing to all these other stocks have volatility, and again, it doesn't have a lot of chop on it, which is another thing. Like I see chops maybe right here and about right here, and that's about it. And I'm talking about since 2020. So for the past 2 years, I only see really low volatility. So it's still not bad, and hopefully this stock can create some interest for some people, just because it's trying to gain momentum, and then also they pay a dividend. So we have here for the analysis, looking at all 5 categories, it's still pretty decent. So it's not really good for income, is what they're saying, but for all the other categories, it's saying it's pretty good. This is pretty cool here. It's telling me which indicators are at the top, which top indicators represent the company well. So it's showing me return on equity, earnings growth, earnings yield, and PE. So being that is shown, let's look at the analyst estimates. So it had a hit, miss, and hit. So 3 out of 4 is pretty good. But again, earnings don't even matter this year, to be honest, because everything has been going downhill ever since the start of the year. So we're gonna look at debt. Hopefully it shows me. If not, oh well. I guess it's not, since the app is acting kind of funky. So net income pretty much flat. Revenue should be slightly going up, but it's not showing me anything. This is really weird. Not showing me any revenue, at least. So past 5 years, balance sheet has gotten better, but the debt has gotten worse. Again, it's pretty typical for banks. So now let's look at some rankings, and I don't have any numbers in value, barely half the numbers in value. Also, we have a debt of 90%. Again, I don't like that. And we don't have anything that's eye-popping when it comes to margins. That could be tied for number 10. Since there's no numbers there, and it's blank, this is blank, this is blank, this is blank. So this number here, all these numbers, those 3 here, they might be tied for the same spot. They might be tied for the same place, for the same number position with another company. So let's look at the dividends, if any. They do pay rising dividends, so that's not too bad. And again, bank holding company operates solely through subsidiary. So for this stock, I'm gonna say watch list. It'll make nice for a watch list. So moving on to the next one, BNS Bank Nova Scotia. I believe this is a Canadian bank. A lot of movement on the volume, which is good, pretty popular. It's showing me slightly undervalued. Nice earnings, nice dividend yield, and total dividend payment. Capital appreciation looks like it's holding up pretty good. So we have here for the news, I fell on Monday, but overall for this year, it's doing crap. But I mean, compared to this month, towards other banking stocks, it's doing better than, so far so good. It's, knock on wood, but it's doing better than other bank stocks as of right now. Analysis we have here, it's mainly really good for momentum. I would say I respectfully and highly disagree. I think this can make pretty good income stock. So it looks like they made a dividend cut. So yes, even though they cut it, they could always raise it again. So this is an international bank, and again, look at the market cap for this stock, 81 billion. So this is a really, really big company. This is not a company to fool around with. I guess headquarters are Canadian because it's showing me Canadian payments for that currency. So we're going to leave it at that. And the last company that we have, so this stock, I'm going to say yes to it. And we're going to move on to the next one. So I said these two no. This one was a watch list, and I do like this one. Definitely, you want to add this one to the watch list, BNS. So last one up is FSEA, First Seacoast Bancorp. I don't like the price. The volume is weak. It's showing me it's pretty strong, but 52-week high and low of $2 difference. That's horrible. Even though it's showing me for the PE, showing me, I wish I had forward PE, but with the PE itself, it's showing me that's a growth stock. I mean, it's close to 30. I do not like these chops. And then on top of that, I see a few flats here, actually. I see a flat right here. Waiting for this pin to write. See a flat right there. Even on top. Yeah, I don't like the stock. Just because of the 52-week high and low. I'm looking at it and it's like, oh geez. So this stock is really good for momentum and growth. Highly doubt that based on the chart that I looked at. And we're just gonna look at the company real quick. They're not paying dividends. And again, these guys have positive earnings, but their margins are awful. I mean, not even 1/4%, 0.5%. It's just 1/10%. It's almost like saying you're breaking even. So I'm gonna look at revenue. For some reason, it's not giving me revenue or operating income. So something might be wrong with the app. And it looks like, this company is having issues. Major issues. So anyhow, judging by a 52-week high and low, and also the volume is really, really low, I'm going to say no to this company. So skip it. And that will be the end of that. So thank you guys for watching. I'll see you guys in the next one.